Hey, this is June from Turning Point Life Investment, and this video is for the week ending in June 20th, 2009. Okay, we're going to look at the SPY, starting with a 3-year weekly view. We mentioned from our last video, where we're saying, hey, someone do something with the market, make it move up or down. So we kind of got the answer this week. Apparently, the bear stepped in and pushed the market lower. You notice that we managed to retest this 50-week moving average. Let me zoom in a bit. Okay, so that was a perfect tag of this 50-week moving average. So you can see how the moving averages are going to be pretty strong support and resistance. In this case, resistance when the market is trending. So if it does pull back, I would say this will continue. The 50-week moving average will continue to act as strong resistance until it's able to push above it. But if the market does dip down and come back up again, I would say keep an eye on the 50-week. That will continue to act as resistance. You can see how on a weekly view we are overbought. It can stay overbought for a long time, but nonetheless, it's telling us it's getting stretched out towards the upside. So the probability of it moving lower would be much higher than if it were to continue higher. I don't know if that made much sense for you, but okay, let's go into 6-month daily view. So as I mentioned, we managed to break down from support. Last week we said the prices were more or less stuck in this range between 93 and 96, and I said, don't try to predict whether we're going to get a breakdown or breakout. Just let the market tell you what to do. If the market breaks higher, then you trade you trade bullishly. If the market breaks lower, you trade bearishly, and that's really all you have to do. And as I mentioned earlier in this video, we got the answer by the bears saying that they want to break lower. They want to take this market lower. So we had a couple of days, 3 days of consolidation, Wednesday, Thursday, and Friday. It looks like it's more consolidation. Doesn't seem like people are coming in to be buying this dip all so much. So I would say I would expect another leg lower, probably to retest the support. 88 is going to be some pretty strong support, so you have to know that. That is a very good level to shoot for as far as to the downside. However, if the bulls do come back in and continue buying these dips, I would say 96 is your next resistance level. If it breaks higher, of course 100 will be the ultimate target to shoot for. But like I said, just watch your levels. All right, if we get continued breakdown, if it breaks below Wednesday's low, then the 88 would be a target to be looking for. Okay, we're going to go into the VIX, 6-month daily view of the VIX, just to look at sentiment. 27, as I mentioned from the last video, was going to be pretty strong support. We said that it was a potential double bottom, but it seems like we're going to possibly retest this, maybe make it into a triple bottom. I don't know. Okay, but all we know is that if it breaks 27, then we know that, okay, the bullish momentum will probably come back into the market. But if we get a bounce off of 27, we know that, okay, the bears are still around. They still want to play. Notice something different. We managed to actually come back and retest a 50-day moving average, which we haven't seen in quite some time. So it's telling us that the market's starting to pick up volatility. And usually when volatility picks up, that means there's potential for more downside to come. So we're more or less, from a sentiment point of view, the VIX is at a critical level of support right here at 27. If we do get that bounce, as I mentioned, we can expect more downside to come to the market. However, if it breaks underneath 27, then there's going to be more bullishness coming to the market. So you just got to watch this level right here. Overall, going back to the market, just to recap, the market is going through some kind of transition phase. Since this whole rally, we've been buying the dips. But we're getting a little bit cautious on buying the dips, so we're not sure if traders will continue to do that. So this is where you have to be a little more cautious. Yeah, I mentioned that you keep doing what works, and what worked before was buying dips. So there's that one moment when that fails. Okay, you don't want to be caught holding too many positions at that one time when traders no longer want to buy dips. And whether that will be the case next week, that we don't know. We just have to wait and see. But you just got to practice good management. If it breaks here, then we know we have a lower low, which means a new downtrend has established, whether short-term or long-term. But just watch the levels. If it breaks lower, you don't want to be holding on to those positions that you should have gotten rid of, because the market's telling you that it's changed direction and changed momentum.